Good day, my esteemed students. I am Mr. Olawale Benishola, your commerce teacher. Welcome to another interesting lesson brought to you by Egotal Virtual Learning. Today, we will be diving into a crucial topic within the WAEC syllabus as usual. Guess what? Business capital and profits. This lesson covers various aspects of capital, credit, working capital, profits, and turnover. Let's move on to the lesson objective. By the end of this lesson, you will understand different types of business capital. That's our number one. Number two, you'll be able to understand the concept of credit and its importance in business. Number three, you will learn how to calculate working capital and understand its significance. Number four, you'll be able to comprehend the meaning of profits and how to calculate them. And the last but not on the least on our lesson objective for today, you are going to understand turnover and factors affecting it. Let's begin our adventure. We are going to be starting with business capital. What actually is called a business capital? Let us look at the meaning and types of capital. Capital refers to the financial resources that a business uses to fund its operation and purchase assets. Let us look at the meaning in the place of an accountant. How does an accountant define capital? This is the total money provided by the owner to start a business. It is referred to as owner's equity or net worth. It is the original money invested in a business by the owner. That is, capital is equals to assets minus liability. How does an economist look at the meaning of capital? He says that these are the man-made wealth or resources used in the production of goods and services. They are man-made productive assets used to create further wealth, for example, machinery and equipment. The journey has just begun. Let us move on to the types of capital. We are starting with authorized or registered capital. What does it mean? This is the maximum amount of share capital that a company is allowed to issue. Example, if a company articles of association states it can issue up to 1 million shares at 1 naira per each, the authorized capital is 1 million naira there. Let us move on to number two. Code of capital. What is code of capital? This is the amount of money that a company has asked its shareholders to pay for its shares. Example, if a company has issued 5,000 shares and asks each shareholder to pay 0.75 kobo per shares, the call of capital is 375,000 naira. Let us move on to paid up capital. What does it mean? This is the amount of money that shareholders have actually paid for their shares. Example, if shareholders have paid 50 kobo per share out of the 75 kobo called up, the paid up capital will be 250,000 naira. Let's move on to capital owned. This refers to the total asset of a business minus its liability. Example, if a business has a total asset worth of 500,000 naira and liabilities of 200,000 naira, the capital owned is 300,000 naira. Capital owned can also be defined as an excess value of the assets of a business over the value of its liability. It is calculated by deducting the total liabilities from the total assets of a firm at a particular date. Let us move on to the next phase, that is liquid and circulating capital. What does it mean? This is the portion of capital used for the day-to-day operation. Example, cash in hand, inventory, and account receivable are all forms of liquid capital. Let us look at other types of capital. We have fixed capital. These are long-lasting assets which are used for the purpose of creating productive capacity, e.g. plants and machinery. We also have current capital, we have loan capital, we have capital employed, we have working capital. All these are types of capitals. The game has actually just begun. We are moving on to credit. Meaning of credit. What is credit? Credit is an arrangement where a borrower receives something of value, which is money, now and agrees to repay the lender at a later date, usually with interest. Let me give you another meaning of credit. Credit can be defined as a promise by one party to another to pay another for money borrowed or for goods received at a later date. It can be a trade credit or a bank credit. It is an arrangement that an individual make with a store shop, for example, to pay later for something he or she purchased. Next, let us talk about the sources of credit. We have banks, we have microfinance institutions, we have cooperative, we have friends and families. We also have trade credit from suppliers, but that is not all. Let me explain some of them. We have loans. This is a source of credit facility in which a banker agrees to lend out some amount of money to a customer at an agreed interest rate for a period of time. Individuals and businessmen can borrow for a specific purpose, for instance, to finance their business operation. Let us move on to number 2. We have overdraft. This is one of the methods of borrowing from the bank. The borrower will be given permission by his bank to withdraw more than what he has in his account. This will be subject to daily interest payments. Do you know that we also have what we call credit card? What is the credit card? A credit card and holder allow credit facility for a specific period of time without any security. It is a card which enables the holder to obtain goods and services on credit at a specified supplier up to an agreed amount. It is normally used in large metal store. Example, we have value card. Other types and sources of credit includes debt factoring, leasing, club trading, and budget accounts. Wait, I am not done. There's what we call credit instruments. What do you mean by credit instruments? These are written or printed financial documents that serve as promises to pay or as orders to pay. Some of them are, we have promissory notes, we have bill of exchange, we have letters of credit, we have credit cards, we also have debentures, hire purchase contracts, we have letter of credit, we have checks, we have postal orders, we have bank notes, bonds, mortgage agreements, vouchers, money order, demand drafts. I am not done yet. Let us talk about the functions of credit. We have facilitate trade, help in business expansion, smoothing consumption, encourages investment. Now let us do a little bit of calculation talking about working capital. This is the formula of working capital. Listen attentively. Working capital is equals to current assets minus current liability. Let me repeat myself again. Working capital is equals to current assets minus current liability. That is the formula for working capital. An example that we are going to use is this. Pay attention. If a business has current assets of 100,000 naira and current liabilities of 60,000 naira, its working capital is 40,000 naira. You know how we got 40,000 naira? Go back to the formula. Let us talk about the importance of working capital. What are actually the importance of working capital? Actually, I have explained the meaning of working capital in types of capital. Now let us talk about the importance of working capital. What are the importance of working capital? Number 1, it ensures smooth day-to-day operations. Number 2, it improves liquidity. Number 3, it enhances credit worthiness. Number 4, helps in facing unexpected challenges. Now you know what working capital is all about, the importance, and we also make an example, a working example of how working capital is achieved. Next in line that we will be facing is profits. Profits. What is the meaning of profit? Profit is the financial gain realized when the revenue from a business activity exceeds the expenses, costs, and tax involved in sustaining the activity. An example, you start a business with some amount of money. Now, after the first period of time that you have sold or you have made sales, you calculate after removing tax, you remove expenses, you remove cost. The remaining amount of money that's remaining is called what? Is called your capital. Actually, I'm not done yet with profit. Profit is the amount incurred to a producer or seller from the sales of his products. It is the difference between revenue and also expenditure. That is what we call profit. We also have various type of definition. Let us look at the economic side of profit. What is profit from an economics? An economist define profit as the payment to the entrepreneur for undertaking the risk of production. It is the total reward available to an entrepreneur, that is return on entrepreneurship. We also have definition from an accountant point of view. What does an accountant say about profit? An accountant, this is the difference between the revenue and cost incurred in the cost of a business. It takes into cognizance the relationship between the revenue and cost. To an accountant, if you want to get your profit that you have made in a business, there's also a formula. It means revenue minus expenses, it will give you profit. Let me repeat myself again. The formula for getting profit is revenue minus expenses. That's how you get your profit. Now that we have known the meaning of profit, can we look at the types? Now I want you to pay attention to this particular section very well. As I'm telling the types of profit, I will also be giving you the formula to get each and every one of them. I will explain the meaning later. Let us start with gross profit. Gross profit is equals to sales revenue minus cost of goods sold. Let me repeat myself again. Gross profit is equals to sales revenue minus cost of goods sold. Let us move to the next one. Operating profit. Operating profit is equals to gross profit minus operating expenses. Let me repeat myself again. Operating profit is equals to gross profit minus operating expenses. Let us move on to the last but not on the least on the types of profits. We are talking about net profit. Net profit is equals to operating profit minus interest and tax. Let me tell you again what net profit is. Is equals to operating profit minus interest and tax. That means that operating profit minus interest and tax will give us what we call net profit. Now let me tell you the meaning of types of profits. Pay attention carefully. I'm going to be starting with gross profit. This is the excess of sales revenue. This is the excess of sales revenue over the cost of goods sold. It shows the total profit before deducting all the expenses. Gross profit is determined in the trading account. Let us move on to the net profit. That is another type of profit. Net profit, this is the excess of gross profit over the total expenses of the business at a given period. This is the real profit of a business. It is determined by preparing the profit and loss account. Can we do an example on profit? What I mean is that we want to calculate on profit, calculation of profits. Let us do an example. Now take note of all these words and the amount I'll be calling out now. Sales revenue 500,000 naira. Cost of goods sold 300,000 naira. Operating expenses 100,000 naira. Interest and tax 50,000 naira. Can we begin the game? Gross profit is equals to 500,000 minus 300,000 naira, which will give us what? 200,000 naira. This means that our operating cost is 200,000 naira minus 100,000 naira. That will give us 100,000 naira. We calculated our gross profit earlier on, 500,000 naira minus 300,000 naira, which will give us 200,000 naira. Our operating profit is equals to 200,000 naira minus 100,000 naira, which give us 100,000 naira. Let us talk about our net profit. Our net profit is equals to 100,000 naira minus 50,000 naira, which give us 50,000 naira. Have you ever heard the word about turnover before? Yes. Turnover, that is refers to the total sales made by a business in a specific period. Let me break your bubbles again. This is the total net sale during a period of time. It is calculated as the total gross sales of a business less return inwards. The formula for looking for turnover is equals to sales minus return inwards. I repeat, sales minus return inwards. But wait a minute, I am not done yet on turnover. Rate of turnover. This is the rate, number of times stocks are replaced during a given period of time. Let me explain again. This is the rate, that is number of times stocks whether biscuit or pure water, are replaced during a period of time. Rate of turnover is the speed at which stock changes hands within a certain period of time. Let us do calculation of turnover. Let me give you another formula apart from the one I gave you, which was sales minus return inwards. I'm going to give you another formula for calculating turnover. Pay attention now. Turnover is equals to, if you want to get turnover, we can use quantity of goods sold times selling price per unit. I'm repeating myself again. Quantity of goods sold times selling price per unit. We can get our turnover. That's another formula for getting turnover, apart from the former one which I gave you. Now let us dive into the ocean. An example which we'll be talking about, we are going to be using biscuit or pure water. If a business sells 1,000 units of pure water, or we can also say if a business sells 1,000 units of biscuits at 500 naira each, then the turnover is what? We are going now go to use quantity of goods sold. That is 1,000 units of either the pure water or biscuits times 500 naira is equals to 500,000 naira. Now, I guess I'm clear with that one. Listen automatically again. The turnover is 1,000 units of biscuits or pure water sold times 500 naira, which will give us 500,000 naira. So our turnover is 500,000 naira. But wait, what are actually the factors that can affect our turnover? Let us move on. We have price of goods, we have quality of products, we have marketing and advertising, we have economic condition, and we also have competition. It is time again to practice our past WAEC question. For each question, you will have to pause and try to answer it yourself before we discuss the solution. Number 1. What is the term for the maximum amount of share capital a company is allowed to issue? This one is coming from 2018. Option number 1, we have called up capital. Option number 2, we have paid up capital. Option C, we have authorized capital. And option D, we have working capital. Think over it. What's your answer? What is our answer? Our answer is option C, authorized capital. This is the maximum amount of share capital that a company is legally allowed to issue as stated in its articles of association. Our next question is coming from what year again? Year 2019. Let us begin. Calculate the working capital if current assets are 80,000 and current liability are 30,000. What's our option? We have option A, 50,000 naira. Option B, 110,000 naira. We have option C, 30,000 naira. And we have option D, 80,000 naira. What's our answer? Correct answer is option A, which is 50,000 naira. Remember, working capital is equals to current assets minus current liability. So 80,000 naira minus 30,000 naira is equals to 50,000 naira. You get it? The next question that we have here is coming from year 2020. We state which of the following is not a source of credit for business? Option A, banks. Option B, suppliers. Option C, customers. Option D, microfinance institution. Take a moment and think about it. What's your answer? The correct answer is C, customers. Why customers provide revenue? They typically don't provide credit to businesses. The other options are common source of business credits. Next, which is coming from year 2021. If a company's gross profit is 200,000 naira and operating expenses is 80,000 naira, what is the operating profit? This one is coming from year 2021. Option A, 280,000 naira. Option B, 120,000 naira. Option C, 200,000 naira. And option D, 80,000 naira. Pause and calculate. The correct answer is option B, 120,000 naira. Remember, our formula, operating profit, is what we are calculating. So the formula is what? Gross profit minus operating expenses. That is to tell you that 200,000 naira minus 80,000 naira, which will give us 120,000 naira. Let us quickly run down through the summary of what we have discussed today. We have covered different types of business capital. We have also covered the concept of credit and its importance. We have covered how to calculate and understand working capital. We have also covered the meaning of profit and method of calculation. We have also talked about turnover and factors affecting it. Let me tell you this, listen carefully. Understanding this concept is crucial for anyone planning to start or manage a business. For example, knowing how to calculate working capital can help you ensure your business have enough funds for day-to-day operation. Understanding turnover and factors affecting it can help you make strategic decisions to increase your sales. I am encouraging you to review these concepts regularly and practice with more past questions. The more you engage with these ideas, the better prepared you will be for your WAEC exams and future business endeavors. Thank you very much for your attention during this lesson. If you have any question or need further clarification, do not hesitate to drop a comment below this video. My name still remains Olawale Benishola. Keep studying and I wish you the best in your upcoming exam. This is Igota Virtual Learning signing out. Stay blessed.